Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities continue to trend lower for the third week as region-specific issues weighed on market sentiments. Hawkish US Fed minutes highlighted that policymakers remain concerned about inflation and raised the odds of additional policy tightening in the US, while property sector concerns and weak economic data from China weighed on Asian markets. For the week, the MSCI World, MSCI Asia ex Japan and MSCI China indices fell around 2.4 to 3.2%, while in the US, the S&P 500 index, Nasdaq Composite and Dow Jones Industrial Average fell around 2.1 to 2.4%. Back home, Indian equities continued their decline for the fourth straight week. The Nifty index remained under pressure over the holiday truncated week, down 0.6% on weak global sentiments and foreign investor outflows. Broader markets performed in line with the Nifty index, with the Nifty small cap index down 0.6%, while the Nifty mid cap index was down 0.1%. Among sectors, utilities, FMCG and auto were the only sectors to end the week in green, with gains between 0.1 to 0.4%, while telecom and metals were the laggards with cuts of over 1.9% during the week. The Indian fixed income market remained under pressure for another week, Indian government bond yields rising further after domestic inflation rose higher than market expectations, and rising US bond yields amid hawkish US Fed minutes raising the possibility of additional policy tightening in the US. The 10-year Indian government bond yield rose 2 basis points to close at 7.22%, while the 3-year and 5-year Indian government bond yields rose by 2 basis points each, respectively. The INR depreciated against the USD as rising US bond yields, stronger US dollar, and foreign investor outflows negated the positive impact of lower crude oil prices. For the week, the INR depreciated 0.3% against the USD to close at 83.1 per dollar. Brent crude oil fell 3.4%, recording its first weekly decline since June, to close at around $84 per barrel as concerns over economic weakness in China and potentially tighter monetary policy in the US overshadowed the signs of a strong physical demand and supply cuts announced by major producers earlier in the month. Among other major macro updates for the week, the first was on India's consumer price inflation, which rose to 7.44% year-on-year in July 2023, the highest since April of 2022, and last month's reading of 4.87%. The spike in CPI was driven primarily by food inflation, which surged to 11.5%, the highest since January of 2020, led by the cost of vegetables, spices, cereals, pulses and milk. Meanwhile, prices of fuel and light went up at a slower pace. The second data was on India's wholesale price inflation, which contracted 1.36% year-on-year in July 2023, lower than market estimates of a 2.7% contraction and last month's reading of 4.12% contraction. This was the fourth straight month of deflation, driven by contraction in fuel and power, which declined 12.8%, while manufacturing articles contracted at a slower pace, mainly for textiles, rubber, plastic products, and food products. However, prices for primary articles and food recovered sharply. On a monthly basis, wholesale prices rose 1.95% in July, first increase in 3 months. The third update was on India's trade deficit, which widened to USD 20.7 billion in July of 2023, higher than the USD 20.1 recorded in the previous month and market expectations of USD 21 billion. Imports fell 17% to a 3-month low of USD 52.9 billion and exports fell at a softer 16% to USD 32.3 billion. This was the lowest figure since October of 2022. For the April to July period, merchandise exports fell 6% year-on-year to USD 244.15 billion, while imports fell 11% to USD 272.4 billion. That's it in this edition of the podcast, and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.